First, post numbers. Let's go across to Vaidyanathan. Samina caught up with him.
See, the thing about deposits is that since 5 years since the start of the bank, we have been focused on one thing: to put out great products where customers can have a benefit and they can enjoy the product. Second is we have really focused on customer experience. Like, we want to keep hacking customer experience both on the internet, the mobile, the branches, the call center. Every touch point, we want to give it customers a super experience. So these two things are really helping the bank. And of course, we become a brand. And becoming a brand is a very momentous occasion in anybody's life. When you're not much known, then you don't get deposits. When you're known and people think of you the right reason, you attract deposits. So we're growing, 40%. Now, to your question, how does it look like for the next year? Well, I say that we want to grow by at least 30% next year on this base of about 2 lakh crores. So we think it's definitely possible.
Right. So Vaidyanathan, 30%, that I think is still going to please the street. I mean, 42% or 30%, I don't think anyone's complaining. But what has led to this push on deposits? Have you repriced your deposits? Is that what has led to you doing much better than some of your other peers? Give me a sense of what is pushing growth at this stage.
I see the last, like I said, 3-4 years, we invested in the brand. Known, if you think of great banks like the well-known big banks, ICICI Bank, HDFC Bank, etc., they are very well known for 25-30 years. So everybody knows them. So our bank was less known. So to build the image of the bank was a very crucial moment to get that kind of deposits, number one. Number two, of course, on interest rates front, actually, incidentally, for the first 5 lakh rupees, we are paying like the street, just for information. We pay up to 3% up to 1 lakh rupees. And above that, we are offering 7%. So because anyway, we're paying fixed deposit, that kind of rate, we might as well offer it here. But for the first 5 lakhs, we are like just bang on with the street, with the rest of the peer group.
Right. So Vaidyanathan, credit cost has seen, guidance has seen a hike. You want to talk to me about why and what is driving that?
See, the good thing about our credit cost is quite low. For the segments we play, our credit cost is only 1%, actually 0.9%, 0.97% of the total assets of the bank, or 1.32% of the loan book, which is frankly quite low. And it's been like this. Many people say, guys, listen, your NIM is so high. Can you manage it like this? Well, it has been so like this for 13, 14 years. So we feel that we have a unique specialization in the segments we operate, and particularly in rural India, where we're focusing upon, the asset quality is just so good. Maybe people in rural India just want to pay. They're just more honest or God-fearing, God knows. But rural India repayment is superb.
And I want to talk to you about your costs, your OPEX. That is one space that you've guided as well for when the second half of FY25 cost to OPEX will come down. Cost of OPEX will come down. How quickly can we see that?
We have said that by Q3, Q4, we've been building this bank. And building the bank meaning we have set up branches. We took it from 200 to 900 branches. ATMs, we took it from 150 to 1,100. So all of these things cost money. We made a really fantastic app. Even an app costs money. So all of these things have been costing money when building it up. But by Q3, Q4, we expect many of the businesses to turn profitable, and therefore we expect Q3, Q4 cost income to come down to the 60s actually.
Right. Mr. Vaidyanathan, I want to talk about margins, and I know a decline there is par for the course, but how much more and for how much longer can we see margins ease?
Margins, we feel we will be able to sustain it, Samina. We don't have a problem with that.
So you're
the nature of a business.
Yeah. So fair to assume that this is the range where you will hold margins at for most part of FY25?
Yes. You should expect that. Right. People should expect it from us.
Vaidyanathan, there are some banks that have gone out and recalibrated their unsecured loan growth. Give me a sense of a mix in terms of secured versus unsecured for IDFC. And are you recalibrating at this stage?
Yes, we are also recalibrating it. We are growing more secured businesses like gold loans, loan against property, or mortgage loans, working capital-backed business financing. Property-backed working capital plus business financing. We are doing home loans, etc. Of course, we're growing that. But on the unsecured bit, we have this unsecured retail financing category, which is the area where even RBI raised the risk weights and all that. Our book is about 15% of the book. And we feel it's very moderate. And more than that, anyway, we're moderating. But the important thing is that the NPA on that book is really very low. Our NPA on that book is only 1.55%. I mean, the unsecured book. And our net NPA is 0.38%. And it's all backed by cash flows. And cash flows meaning when we lend, we look into the bank statement account of the customer, we see the money customer has, keeps balances of that amount, and then we lend against it the customer.
Right. ROAs, Mr. Vaidyanathan, they haven't moved very much. You want to tell me what sort of guidance are you setting out for yourself on ROAs for FY25?
ROA, frankly, the momentous occasion for the bank came when we moved our ROA to 1% plus. So last year we were 1% plus. So this year also we were 1% plus. And by the way, if you look at large corporations like even large state-owned institutions, etc., who have taken, or even Indian institutions, private institutions have taken like 15, 20 years to get to these numbers, reach there in 5 years or 5.5 years from 0 5 years ago. So even this year we expect it to be somewhere in the zone, maybe slightly upward bias. But by Q3, Q4, we expect our ROA to open up meaningfully. We expect our cost-to-income ratio to come down. We expect our profitability to touch, let me say, with all the caveats of life, we can say that we expect to go past the 1,000 crore mark in PAT by fourth quarter of this year, probably beat it by a margin.